subprime crisis. Allocation, D&O, and E&O will be the big issues facing reinsurers, says an industry veteran. An interview with Edward Krugman by Teresa Zink. Edward Krugman is a partner with Cahill, Gordon, and Reindel in New York. He spoke on implications for the reinsurance market of the subprime crisis, Global Reinsurance Forum held October 6th and 7th in Boston. Aggregation issues arising out of directors and officers and errors and omissions insurance policies will likely be the most common issues to face insurers and reinsurers as claims arising out of the subprime lending crisis work their way through the claims cycle, according to industry veteran Edward Krugman. Noting that there are between 6 and 8 major players in financial services insurance with long-standing relationships, Krugman predicts aggregation fights will take center stage as losses become known. However, Krugman is quick to point out that in the case of the subprime mess, it is still incredibly early. If you think about new types of liability or new types of claims, you get the underwriting cycle, which is followed by the claims cycle, which is followed by the reinsurance cycle. We are still very, very, very early in the claims cycle. What that means is that people don't yet really know what will shake out. We can, however, make an educated guess based on industry experience in the savings and loan crisis, stock options backdating, and other previous financial issues, says Krugman. Where the action is. The action is going to be D&O and E&O, Krugman predicts. The action is going to be who are the players and who are going to get sued. We know who some of them are. They're going to be the due diligence companies, the investment banks, the law firms, the accounting firms, the rating agencies. What do these players all have in common? There tends to be a core group of insurance companies that write D&O and E&O insurance for these companies, according to Krugman. So the potential for clash and aggregation is out there. It's real. For example, Krugman explains, say a $300 million deal blows up. It was split into 20 tranches and rated everywhere from AAA down to unrated. Let's say there's $60 million in value left, so it's a $240 million loss. There was a law firm that signed off on it. There's a due diligence company that investigated the pool of mortgages. There are 2 or 3 originators who put it together. Maybe there was one lead investment bank. All of those people are going to get sued. So is whoever rated the deal. All of those people are going to have E&O coverage from the 6 or 8 major players and some little extra coverage elsewhere. There's your aggregation issue. The answers for reinsurers are going to come down to reinsurance treaty language. Who has treaty protection? How does it read? None of these are going to be facultative issues, according to Krugman. These are all treaty issues. That is not to say there won't be plenty of reinsurance issues to go around, says Krugman. However, he explains, what is interesting to me is that I am not sure that the issues will be new. For the most part, according to Krugman, the reinsurance type issues are fairly well known and understood. There are going to be allocation issues, there are going to be aggregation issues, there are going to be occurrence issues. Familiar issues. Some of the insurance questions that will arise out of the subprime mess will sound familiar, according to Krugman. Are all the claims arising out of the failure of a given institution going to be a single occurrence? What will be the year of loss? Is it the year the deal was done? These are all claims-made policies. When did the insured give notice? What notice did they give? What were the circumstances? It sounds a little like the issues that arose in the environmental coverage arena, and there are similarities, Krugman admits. However, he predicts, the issues in subprime are going to be easier than the issues in environmental because they're going to be sharper. They're going to be more distinct. For example, Krugman explains, if you want to think about subprime as a problem, think about travelers' type aggregation issues, where travelers argued that the environmental policy of a given insured was the fault, was the occurrence. Therefore, all the claims could spike up. Most people think in environmental claims each site is an occurrence. There might be multiple occurrences at a site, but each site is an occurrence. Some insureds also had a different view, looking to see if they could get more vertical coverage. Those are going to be the same kind of issues in the reinsurance here. However, the issues will be more defined, according to Krugman. First of all, there are much newer policies than the old general liability policies. Most of the underlying policies were written by people who had allocation and the old environmental problems in mind, so they are pretty careful about defining year of loss and issues like that. While allowing that strange things can happen, Krugman believes that coverage for subprime is contained in more specifically tailored policies with more specifically tailored reinsurance. According to Krugman, there are going to be plenty of insurance issues, but most of those will be straightforward issues. The big things people are going to try to look to insurance to do, and what they did look to insurance to do to resolve environmental issues, that's not going to happen here. They are not going to be able to solve public policy issues of insurance. There are going to be plenty of insurance issues. There are going to be plenty of insurance claims. They're going to morph themselves into reinsurance issues, and aggregation will be the principal issue on that. Sophisticated players. Krugman points to two additional reasons for his prediction that reinsurance issues will be fairly straightforward. First of all, according to Krugman, the people who write financial services reinsurance tend to be fairly sophisticated, and people who write financial lines, D&O and E&O, which are the principal lines here, as insurance, also tend to be fairly sophisticated. That means in this situation there are likely to be fewer surprises as the insurance and reinsurance claims start coming in. These are people who know what they are doing, number one. Number two, Krugman explains, ceding companies tend to write over fairly high retentions. I'm not talking about underlying retentions, I'm talking about reinsurance retentions. With such high reinsurance retentions, for the most part, on straight claim settlement issues, I think it is unlikely that reinsurers will have a lot to complain about with regard to bad claim settlements. That takes one set of pressures off the reinsurance claims cycle. That's not to say there won't be some interesting reinsurance aspects, Krugman predicts. Because the insurance companies are all players in subprime, you are going to occasionally, I suspect, find a situation where someone makes an accusation at a given insurance company in a given circumstance was handling a liability with its investment account in mind, or was looking to trade dollars with an insured, or something similar. Anytime you have an allegation like that actually has something behind it, you're going to have interesting claims issues. That's something that wouldn't surprise me if it comes up, but we'll never know. Those are all instances that are going to be handled in arbitration. D&O and E&O. In addition, Krugman predicts, the D&O fallout is likely to be larger than in stock option backdating. Why? In many of the stock option backdating cases, many of the people were still around and could give the options back or could give the compensation back, according to Krugman. Personal profit exclusions also tended to make backdating claims less of an insured loss. However, in the case of subprime, it's not a question of people having made personal profit, so there will be less scope for some of the traditional exclusions. On E&O, and taking investment banks as an example, Krugman explains, investment banks buy coverage for their advice. They don't buy coverage, in theory, for losses to the investment account. However, as investment banks start to go down as a result of their subprime exposure, one way or another they are going to be people who try to describe what happened as the investment bank acting in an advisory capacity to try to trigger E&O coverage as an error and omission of the investment bank, rather than a loss to its proprietary account. In another example, Krugman notes that bankers have coverage as mortgage servicers, but don't generally have coverage for the mortgages they buy and sell. There are going to be some coverages for banks that extend to origination, according to Krugman. What that means is, if the bank has to buy the mortgage back and doesn't do it, that's a breach of contract, which is traditionally not a covered type of claim. Do I think that people will try to transform that into a covered claim? Sure. Do I think they will succeed? When people try things like that, they sometimes succeed. You just don't know. Asked if he anticipates pressure for a broader interpretation of policy exclusions, Krugman says there are always attempts to push insurers. However, he says, there just isn't a lot of room to find coverage, for example, for breaches of contract. Coverage capacity. Asked to predict whether there is enough coverage out there for these claims, Krugman's answer is emphatic. No, of course not. This is not a situation in which we can find someone to blame. That person has insurance and we can solve all our problems. Nobody thinks that the $700 billion Treasury program is going to be enough to solve the problem. And there isn't enough capital in the insurance and reinsurance industry, certainly among the companies that wrote those lines of business, to close the gap. At the end of the day, the action on this is not going to be insurance action. This is a public policy and macroeconomic issue. There's going to be plenty of insurance action to go around, and the reinsurance action is way down the line. But the action here is going to be what is going to happen in the economy. Only at the margins, I think, is this going to play out in ways where insurance matters, Krugman concludes.